The euro is approaching a critical test this week as we close out the month of September. Plus, we have non-farm payroll on Friday. So I'll show you the key level I'm watching this week and why it matters for the euro USD, and also the latest on the DXY. So euro USD daily time frame, let's start here. Obviously, we know that the market has broken that February trend line that we've talked about in recent videos. So if you saw the weekly forecast, what we discussed there was the fact that off of this February low, this is an interesting trend line in the sense that it doesn't connect with lows back here. However, what you'll notice is that since this low, we have several touches off of this level. And last week, we did get a break below 1.1740. The significance of this level can be seen last week with that price action between the breakdown and retest. So on this candle, this is when I made the Euro USD video. I talked about how 1.1740 was going to be significant for this market, and that a break below here could open up downside targets. And what you'll notice is that on this candle, okay, so if we look at this candle right here, the high of this candle came in right here at the top of that trend line from February, right? So we had the break here on this candle, so confirmed breakdown, retest on Thursday. Now 1.1645 is interesting as well, because I mentioned this in the VIP group and the Discord group as the market was breaking down, which, by the way, if you want to join us in there, see the link in the description of this video for 85% off lifetime access. But this level down here, I mentioned this to VIP members in Discord, the euro is breaking down. So 1.1645, this is significant in the sense that it is a 5-week composite POC. What that means is that during this period back here, all of this congestion, 1.1645, this is where the euro spent the most time within this congestion. So at first glance, this wouldn't be obvious. However, if you turn on TPO, time price opportunity, that is a TradingView premium indicator. It does show that if you do a composite, a 5-week composite of this period, you get 1.1645, and you can see where the low last week was right off of that level before this bounce. So what we discussed in the weekly forecast was that we had single prints, okay, imbalances up here in this area around 1.1722, also 1.1780. Now, this one so far here on Monday has been satisfied. It has been taken out. We also have these lows back here, which is where the euro is finding some selling pressure here on Monday. However, there is a second single print that I'm eyeing this week as we close out the month up there around 1.1780. So this right here, if we take a look at the 30-minute time frame, and this is just so we're all on the same page here, if we take a look at this and I turn on TPO, again, this is a premium indicator on TradingView. It's an indicator that I've come to love just because it complements the way that I trade price action so well. This is a market profile indicator. So what these blue lines here show are what are called single prints, so imbalances. And the way that these typically form is, you can see back here, we have this consolidation from the euro. Okay, so we have this consolidation back here. We have this expansion point where the euro broke down, and we have yet to see a retest up here. So areas like this tend to serve as, I often call them magnets for a market, because market makers love to tag these areas because they represent an imbalance in the market. Okay, an imbalance between buying and selling pressure. So you can see where the euro is finding selling pressure at these highs over here. However, we still have this one open for business, so to speak. And so as we go into the month close, this is going to be significant. And again, we do have non-farm payroll on Friday as well. So this week, what I think this is going to come down to for the euro is, in my opinion, if you're looking for shorts, and for me at least, if I'm looking to short this market, I mean, sure, I could look at these lows back here, but I know that we have the month close coming up on Tuesday. And a lot of times you do get volatility on those monthly closes. And furthermore, we have that non-farm payroll coming up later this week. So for me, I'm looking a little bit higher up because I want to short high, long, low. I don't want to short in the middle of this range, right? Because you look at the highs up here, the lows down here, we're essentially kind of in the middle of this range. I want to short toward the higher end of that range. Now, another key factor here, or a couple reasons why I like this area around 1.1780, why I think this is going to be a critical level here for the euro, is that not only is it the trend line here from February, but if you look here, let's take a look at the 4-hour time frame. And this is a way that you can use Fibonacci's or really anything out there and kind of level up your game. And what I mean by that is, a lot of people will take their fibs and they'll draw it off the high and the low, and they'll end there. They'll stop there and say, okay, these are my fibs. And they are, right? These are key levels that you can use. However, you also want to make sure that you're lining these up with key levels that you've drawn previously, right? You don't want to just blindly use these levels. They should complement key price action levels you had drawn before. However, you can up your game a little bit here, because what you'll notice is that right off the bat, off of this high up here, down here to the low, you can see where the 50% does come in right there at 1.1780. So this is the 50%, not technically a fib level. However, markets love to test that 50% level. And so you've got the 50% here. Now, the way that we can up our game a little bit is if you take a look, okay, this move lower has had two legs. And what I mean by that is that this is the first leg here. We then bounced, and this is the second leg. Okay, so first leg up here, second leg down here. So what you can do is we have our fibs drawn across the entire range. However, from this high up here down here to the low, that's where we drew our fibs. If you then take your fibs and draw a level or start up here at these highs and drag it down here to the low, what you can look for then is confluence. And it's not always going to line up. However, when it does, it tells you that the level where you have that intersection is all the more significant. So again, what we're doing here, just to kind of clarify, we're taking our fibs from this high up here, down here to the low, then from this high up here, again, this was that second leg, and then down here to the low again. So what you'll notice here is that we have the 50% lining up right there like we talked about. We also have the 786 fib lining up at the same area. So you have this confluence up here where you have the February trend line, you have that single print, that imbalance from that move lower, that you then have two Fibonacci levels, or technically one Fibonacci level, right? The 786 plus that 50% retracement. So there is a lot going on up here. There's a lot of confluence up there at 1.1780. Now, just to be clear, okay, we obviously have the month end coming up. We also have NFP. And I want to be clear that this does not mean that the euro has to respect this area. It does not mean that the market has to retest this area. It might not even retest it at all. It doesn't mean that the market has to retest it and then respect it. However, what this tells you is that, at least in my opinion, this area up here is going to be the line in the sand between bulls and bears. So what that means is that if we see the euro reclaim this area on the high time frames, get back above here, then that could unleash a rally in October. If we see it sell off from here, then you know that sellers are taking over, okay? Now, I know that that may sound a little bit ambiguous. People say, well, you're basically saying that the market can go higher or lower, right? How does it help me? And on its own, it doesn't help you. However, if you know that there is a specific pivot to watch, that is half the battle. Like if you know that 1.1780 is that pivot to watch, is that kind of hinge between bullish and bearish scenarios, that's going to help you a ton. So for me, at least, I'm looking for shorts up here. That is the bottom line. We had the breakdown from that February trend line. I know that it's a range-bound market. I'm not being blinded by the fact that we had this break and thinking the market is just going to rotate lower, because that's not how markets act, especially when you've had this much sideways action. So I'm treating this as a range, guys, but at the same time, like I said, I want to be looking for shorts up here. Now, looking at the DXY, if we flip over here, take a look at the US dollar index. I want to start here on the weekly time frame, because last week was significant, potentially significant here for the US dollar, in the sense that we had this 97.7 level back here. We saw the weekly close below. The DXY came down here, took out those unfinished auctions, and also filled in that lower wick on the weekly time frame. We talked about this several times in videos. And now we have the DXY back above 97.7 on a weekly closing basis. And also another thing here is that the DXY also tested 98.6 exactly last week. This is that resistance level that we've discussed many times in videos as well. So what I mentioned in the weekly forecast was that we had this single print down here. This has been satisfied now on Monday. Okay, so we can tick that box, right? The market has come down here and taken this out. However, we still have 97.7 open for a retest. And we also have an imbalance down here, as well as a fair value gap off of this high closer to 97.5. So in my opinion, if you're looking to buy the US dollar, and this is never financial advice, but I think if you're looking to buy the US dollar, this area, this pocket between 97.7, 97.5, this in my opinion is really the one that has to hold. Because if we see the DXY back below here on the high time frames, then I think we're looking at that pushback here toward that 2011 channel support. However, at the same time, in my opinion, this is where buyers are likely to step in between 97.5, 97.7, and potentially getting, that push after we satisfy this level down here, that fair value gap, potentially the bounce from there to push back within the range. So that's just my opinion, guys. I'm looking to trade the extremes here. And for now, the extremes are up here and down here. Okay, this is your new range following that weekly close last week. Again, obviously, if 97.7 fails, then we're looking at the market just ranging between these areas. But for now, this up here is your range. But I know that there is an imbalance down here from last week. I also know that there's a fair value gap off of that 97.5 area. So for me, if I'm trading the extremes, this is what I want to see. I want to see the market wick down here, take that out, and then bounce. Okay, will we get it? We'll have to wait and see. But again, we do have some market moving events coming up, especially that monthly close, because again, keep in mind, markets can become very volatile on market closes or monthly closes. So just keep that in mind as we roll into the September close. All right. And if you're new here too, I want to point out that this right here on the monthly time frame, this is that 2011 channel support for the DXY. So you can see that the market has been bouncing around here for the last few months. And so this is why, like I've said recently, I think you've got to be really careful getting bearish on the US dollar, especially as it, approaches this area down here of support, right? There's no guarantee that we are going to get a more significant bounce from the US dollar. Obviously, this market has been trending significantly lower in 2025. But at the same time, this down here, this area, as we went into FOMC, this area down here, this pocket is a massive support area for the DXY. So you've got to be careful getting bearish on the US dollar, especially if we see a bounce, from this area in the market hold above 97.7 this week. All right, guys. So that's it for today's video. I hope it helped. If it did, be sure to subscribe to the channel, hit that like button. Also join us in VIP. Check out that link in the description of this video for 85% off. Trade well out there. Enjoy the ranges while they exist. And I will talk to you again tomorrow.